Have you ever scrolled through the news and seen a celebrity buy some random business that makes you scratch your head and go, why on earth would they do that? Like when a rapper suddenly buys a struggling pizza joint in the middle of nowhere, or when a Hollywood actress buys a dying candle company with one store left in Oregon. It seems pointless, like they're burning money for fun. But what if I told you this wasn't just rich people being bored? What if it's a legal money game? A tax hack only the wealthy really understand? Let's break down the real reason celebrities keep buying useless businesses and how they actually save millions doing it. Back in 2019, a famous NBA player, let's call him Jake, invested a couple $1,000,000 into a random chain of vegan juice bars. Not in LA or Miami, but in small towns across the Midwest. Nobody could understand it. The press covered it like it was a feel-good investment. Athlete promotes healthy living. Cool. Fast forward 3 years. The business goes belly up. The stores close. Jake quietly moves on. End of story, right? Wrong. Because if you followed the money, you'd see something shocking. Jake may have actually made money from that failure, or at the very least, saved a ton in taxes. See, when that business failed, it gave him something incredibly valuable, a paper loss. That's where the tax game begins. Let's break it down. A paper loss is when something looks like it lost money on paper, even if you still walk away winning. Here's how it works. Let's say you made $10 million last year. Normally, you'd owe a huge chunk of that to the IRS, upwards of 40% in federal taxes alone. That's $4 million gone just like that. But what if you lost $3 million in a business you bought? Suddenly, your taxable income drops from $10 million to $7 million. That means you now owe taxes on less money. And in some cases, that loss can be used to offset taxes for years. Now multiply that by a few different businesses and a team of accountants working overtime to structure it all legally. You start to see why celebrities buy these so-called dumb businesses. It's not about profit. It's about strategy. This is part of a larger tax play called tax loss harvesting. It's more common in stocks and real estate, but celebrities apply it to businesses too. Here's the formula. 1. You earn a lot of money, movies, endorsements, tours. 2. You invest in a high-risk or low-performing business. 3. The business fails, but you don't panic, because it was always part of the plan. 4. That loss offsets your earnings. You pay less tax. 5. Meanwhile, you funnel the money back into trusts, new investments, or other LLCs. It's like financial judo, using the weight of your losses to throw the tax bill onto the mat. And remember, many of these celebrities are surrounded by business managers, lawyers, and accountants who live and breathe this stuff. They're not buying a candle shop because they love wax. They're doing it because it fits into a chess game we don't even see. Let's look at some more examples. You've probably heard of celebrities buying restaurants. Why do they always fail? Because they're supposed to. A restaurant is one of the easiest businesses to start and the easiest to write off. Another example, fashion brands. Remember when a certain pop star launched a high-end clothing label? It sold poorly. The line was discontinued in 2 years. But during that time, the brand spent millions on travel, consulting fees, photo shoots, even office rentals in high-end locations. Many of those expenses? Business deductions? The IRS sees a failed fashion label. Her accountant sees tax savings. And when that brand folds, boom, a loss on paper. That gets reported against touring income, streaming royalties, and sponsorship checks. This isn't fraud. It's not illegal. It's smart if you know the rules. Here's where it gets wild. Sometimes the celebrity will sell the failing business to another company they also own. So let's say the juice bar chain is going down. Instead of letting it die, they sell it for pennies to a different LLC under their name. Now, the first company records a loss. The second one might restructure the business, get more loans, and start the cycle all over again. It's like a money recycling program, and as long as they follow the rules and document it properly, they can keep using this system for years. Even if a business never turns a profit, it can still be useful as a financial shield. So, what can we learn from all this? You might not be able to buy a pizza chain to save money on your taxes, but the core idea, using the structure of business to reduce taxes, is something anyone can study. Whether it's starting your own LLC, learning about deductions, or understanding how to offset income with business investments. The more you think like the wealthy, the more options you'll have. Because in the money game, it's not about how much you make. It's about how much you keep. And that's the real secret behind why celebrities buy useless businesses. They're not wasting money. They're playing a completely different game.